South Africa's manufacturing sector ended 2024 on a weaker footing. Output for December declined by 1.2%, following a contraction of close to 2% in the previous month. The biggest declines were in the metal production, including iron, steel and machinery division. Stats SA has also cited the performance of the motor vehicle and transport equipment sector. FNB senior economist Tanda Sithole says with new vehicle sales showing signs of improvement, automotive production is expected to recover modestly, and that's expected to provide some support to overall manufacturing output. Sithole has added that an anticipated improvement in domestic aggregate demand, coupled with the suspension of load shedding, should help drive a recovery in the sector in 2025. The Government of National Unity may face disagreements on some fundamental policy issues, but it does not pose a significant risk to the economy at this point. That's according to Standard Bank's chief economist, Gulam Balim. Speaking at the bank's 2025 Economic Outlook media briefing in Johannesburg, Balim said the GNU had faced challenging moments but had proven resilient. He noted that this has signaled a few things, for instance, that the GNU had softened the ideological dominance of both the ANC and DA, allowing for more constructive discussions. Impala Platinum's warned of a steep drop in half-year profit. The miner's headline earnings are expected to decline by up to 49%. That's due to lower rand revenue, which offset the benefit of improved refined and saleable output, higher sales volumes and strong cost controls. Implats has described the operating performance as commendable, following group-wide labor restructuring and changes to operating parameters at several of its assets. Santam's eyeing a profit bump. SA's largest short-term insurer says its year-end headline earnings per share should increase by at least 40%. Santam has cited improved underwriting results for conventional insurance business, as well as earnings growth at the alternative risk transfer businesses. More detail will be provided when Santam opens its books next month. Eskom might face an uphill battle if industrial heavyweights start closing their doors. That's according to energy expert Tshepo Khadima. Khadima is referring to ArcelorMittal SA, which is considering closing its two major long steel plants in Newcastle and Vereeniging. While Eskom insists AMSA's potential exit will not affect the country's electricity supply, Khadima has warned that losing large industrial clients poses a significant risk to the power utility's financial stability. Eskom is already grappling with a shrinking customer base due to soaring tariffs, as well as the increasing affordability of renewable energy alternatives, and has been relying on large industrial users to offset declining revenue from residential and small commercial customers. In international news, luxury group Kering's fourth quarter sales were hit by a continued slump at its main brand Gucci, but a slight improvement in the group's performance in major markets, China and the United States, buoyed investors. Let's take a look.
Gucci owner Kering wasn't in fashion with buyers during the fourth quarter. The French luxury group reported a 12% drop in sales from a year earlier Tuesday, dragged down by its flagship Gucci brand. Gucci sales fell just under a quarter as an overhaul failed to win back shoppers. That was worse than analyst projections. The company sacked Gucci designer Sabato De Sarno last week in a move to revive the famous label. Kering tried to turn Gucci around with a new minimalist design approach from De Sarno, but the move was complicated by a global slump in luxury demand. The industry sales rate is the slowest in years and weighed down by cautious shoppers in China. But investors were happy enough with a positive update Tuesday about Kering's latest Chinese performance. The company pointed to an improvement in the country and the US, which helped send the stock price up 5% before scaling back later. Kering said the company's sales in mainland China and among Chinese shoppers globally rose by a combined 6 percentage points compared with the previous quarter.